Well, for more insight into China's economy, CGTN's Rachelle Akuffo spoke to Dan McClory. He's Managing Director and Head of China for Boustead Securities. Dan begins by talking about what's driving the rise in industrial production in China.
It's the post-COVID comeback and China's absolute desire, as we talked about in our last interview, to really get that industrial infrastructure going first. They knew that consumers were going to be a little held back, just a little tentative and cautious, but one thing that could really be emphasized and encouraged was the industrial sector, and that's exactly what we're seeing with this factory output.
That's interesting. We also saw that fixed asset investment was up 1.8%. So what does that kind of spending by businesses signal about how they're feeling about moving forward?
Well, it's obviously a show of confidence. I think some of that can be attributed to the government and state-owned sector. So it's not all entirely private capital that's flowing in there, but many of those contractors that are hired for those fixed investments and those projects are private sector companies. So I think it's positive. As you know, companies tend to be very tentative and get in sort of a retrenched mode when difficulty hits. So to actually be spending once again is a good sign.
Now, you mentioned consumers, and we saw that even though the industrial and investment-led parts of the economy were the stronger ones, even though we did see an upswing with consumption, it did still lag behind some of the other indicators. Why do you think we're seeing this imbalance, and what's your longer-term outlook for that?
Well, first of all, I think everything is relative, and seeing any uptick in consumer spending for now 2 months in a row is highly encouraging. Remember, when we talked about September, the idea was there had been pent-up demand for 4, 5, 6 months, and it finally came back in kind of the pre-Golden Week spending. Well, we've sort of disproved that. It wasn't a one-and-done scenario. So I think the encouragement from October is now we have further month-on-month gains, further and slight year-on-year gains in consumer. So I'm China. I'm going to take that increase. I'm going to take that uptick and that growth, even though by China standards, it would be a little measured and a little pedestrian.
So then from an investor standpoint, then, what are they most excited about and what are they most concerned about as they continue to see this data coming out of China?
Well, I think, let's face it, at what pace can the Chinese economy continue to grow? I'm just going to say in overall terms. I mean, is there ultimately a ceiling? And yes, this is definitely the COVID comeback that we're witnessing. But remember, let's take stock of what's occurred in China, okay? So since 1980, that's just 40 years, the Chinese economy has doubled 5 times. 5 times. Okay, in that same time period, let's say, it took the US 32 years to double its economy in 2002. It took the UK until 2006. It took Japan until 2016. 36 years to do the same thing once, for each of those countries to do it once. And this happened 5 times. So everything is very relative. And yes, when you have a fast growing economy, you start to expect this. But these are really significant growth trends.
And as you mentioned, some of their trade partners there, how do you see them? And obviously some of them, these economies still in lockdown and going through surges because of the pandemic. How do you see those relationships affecting the sort of outlook you have for China?
Well, China has made it a priority to focus on domestic consumption. So even, let's not take for granted that all this factory output is just purely for export. It's not. There's a lot of domestic consumption built in there. So I think it remains cautious. The rest of the world is trying to get back to normal. In fact, hitting second waves in a lot of the major westernized population centers. So the Western or the non-China comeback is not assured and not sort of built into forecast yet. So I think it would be cautious. And China is wise to keep an eye on encouraging domestic consumption, encouraging capital expenditure and domestic investment, some of those other statistics that you just pointed out.
Now, I want to look at something that was in the making for about 7 years, the Regional Comprehensive Economic Partnership, or RCEP, now known as the world's biggest free trade agreement, which was signed over the weekend. How important is this, not just diplomatically, but economically for China as well as the region?
I think it's very important. RCEP, after I used to say that TPP, the Trans-Pacific Partnership, which, what did we call it? Trump pulls the plug, I think was the other acronym that we gave it. It was very much needed in a post-TPP world. And what you've seen is kind of the haves now getting together with the have-nots. So the haves of China, Japan, Australia, New Zealand, South Korea coming together with the smaller ASEAN countries. So I think that's really significant. That form of multilateralism, with the bigs helping out the smalls and the mediums, is very much called for in a post-COVID world. So I think it's material, and I think we should read some good things into it. I think we should talk about, basically the countries who weren't involved, and primarily India was not involved. So they have stayed out. They really don't want to welcome a whole lot of competition. At least that's the position that they've taken. So I think it's a significant and material development.